All right, let's get right into it. We just saw three huge events rock the financial world, and on the surface, they look like they have nothing to do with each other. But trust me, they're all connected. They're all part of this massive money shock that's sending ripples everywhere.
First up, you've got Bitcoin, the big one. It just took a sudden, brutal nosedive, and a whole lot of money vanished into thin air.
Then, there's this tech company, MicroStrategy. You know them, they went all in on Bitcoin. Well, their number one asset is suddenly in a free fall, and billions of dollars are on the line.
And while all that chaos was going down, a quiet, multi-billion-dollar deal was made in the world of AI that just completely changed the game for the entire chip industry. A whole new battle is about to begin.
So you've got a crypto crash, a corporate panic, and a huge strategic power play in AI. How in the world do these fit together? Well, that's what we're about to break down.
Okay, so our story really kicks off with that first domino, a really sharp, sudden drop in Bitcoin's price right as the month began.
And wow, this chart really tells the story, doesn't it? 1 minute, the market is just humming along close to $93,000. The next, bam! In just 24 hours, it tanks to around 84,600. We're talking a nearly 10% drop. This wasn't a slow leak, it was a straight-up shockwave that caught so many people completely by surprise.
And the price for getting caught by surprise? $500 million. That's how much money in leveraged bets, we're talking people borrowing money to make even bigger bets, was just gone, wiped out. These were all traders convinced the price was going to keep climbing, and they just got run over.
Now check this out, because this is what's really telling. A whopping 90% of those wiped out positions were longs, people betting the price would go up. That just goes to show you how much of a blindside this was. The whole market was basically positioned for a party, and instead it slammed right into a brick wall.
And this analysis from FX Street just nails it. The market did try to bounce back. It fought. But the selling pressure was just way too intense. Every little recovery attempt got shut down. The bears, the folks betting on a price fall, were officially back in charge. And of course, that sell-off had huge, immediate ripple effects for one company in particular.
Which leads us straight to our second story, MicroStrategy. This is a company whose fate is tangled up with Bitcoin more than any other public company on the planet.
To really get what's at stake here, you just have to look at this number, 650,000. That's how many Bitcoin the company owns. To put that into perspective, that is over 3% of all the Bitcoin that will ever exist. For them, this isn't just some line item on a balance sheet, it's pretty much their entire strategy.
So that brings up the multi-billion-dollar question, right? When your entire company treasury is basically built on this one volatile asset, and that asset suddenly tanks, what do? Do you sell? Do you panic?
Well, MicroStrategy's answer wasn't to panic, it was to prepare. They immediately announced they have this cash reserve of almost $1.5 billion. Now this is a super calculated defensive play. It's them sending a signal to the market saying, hey, we have the cash, we can pay our bills, we can manage our debt, which means they won't be forced to sell their Bitcoin at a loss no matter how crazy things get.
And this one move basically split Wall Street right down the middle. You've got one camp, the doom narrative, looking at the company's massive pile of debt and asking, can they really survive a long, cold crypto winter? But then you've got the other side, the premier proxy view, arguing that, hey, with all that Bitcoin and a big cash buffer, MicroStrategy is still the absolute best, most solid way for an investor to get exposure to Bitcoin.
Okay, so while all this very loud, very public drama was going on in the crypto world, a much quieter, but you could argue much more important battle was being fought, a strategic war for the future of AI. And this one could have a way bigger impact than any short-term market crash.
And then, almost out of nowhere, we get this news. Nvidia, the absolute king of AI chips, just dropped a cool $2 billion into a company called Synopsys. And let's be clear, this isn't just some financial investment. This is a massive strategic move designed to tighten their chokehold on the entire AI industry.
So why Synopsys? What do they do? Well, they're a giant in something called EDA, Electronic Design Automation. The simplest way to think about it is this: it's the critical software you have to use to design any complex microchip today. It's like the architectural blueprint software for every advanced chip in your phone, your car, you name it.
And their goals for this partnership are just huge. They want to use AI to actually design chips faster, work together on putting AI into physical things, create these so-called digital twins to simulate everything,
and basically take over the market together. What Nvidia is doing is embedding itself at the very start of the process. They want to control the tools that everyone else in the industry needs to use.
Now, a move this big, it doesn't happen in a bubble. It's a direct shot across the bow in this escalating war for AI supremacy, and it puts a ton of pressure on Nvidia's biggest rival, Intel.
But this is where the strategy gets really interesting. Nvidia isn't just betting on its partners, it's hedging its bets by investing in its rivals too. Earlier this year, Nvidia also pumped $5 billion straight into Intel. So why would you fund your biggest competitor? It's because they want a piece of the entire supply chain. It creates this web where no matter who's winning the manufacturing race, Nvidia still benefits. It's a brilliant and kind of ruthless strategy.
And what you're seeing here is a fundamental clash of strategies. On one side, you've got Nvidia. Their whole game is to control the ecosystem through these partnerships and investments to become the sun that all the other planets orbit. Then you have Intel. They're going all in on rebuilding their own manufacturing muscle, their foundries, to try and become the undisputed leader in actually making the chips again with their new 18A process. It's a classic battle, ecosystem control versus owning the factory.
Okay, so let's pull back for a second. We've got a crypto crash, a massive corporate defense, and a huge escalation in the chip war. Let's try to tie this all together and figure out what it means for the coming week.
Here are the 3 things you really need to keep your eye on. First, Bitcoin's price floor. Is that key $80,000 psychological level going to hold? If it doesn't, things could get ugly fast. Second, watch MicroStrategy stock. Are investors going to see their cash reserve as a smart defensive move, or are fears about their debt going to win out? And finally, the AI investment race. Nvidia just made a huge move. Now we watch to see how Intel and the others respond. Expect more big partnerships and investments.
And that really leaves us with one last big question to think about. We've seen 2 massive forces here, the wild, unpredictable world of crypto and the quiet, strategic, long-term innovation happening in AI. So looking out a few years, say to 2026, which one do you think is going to have the bigger, more lasting impact on all of us? I'm really curious to hear what you think, so drop your thoughts in the comments below. And hey, if you got something out of this breakdown, a like and subscribe would be awesome. Thanks for watching.